Hey, it's Joe here with Eagle Tax Res, and we want to talk about settling your tax debt for pennies on the dollar. You know, we hear it on the radio all the time. Can you really settle your tax debt for pennies on the dollar? What I'm going to do is we're going to go through a couple different scenarios here. We're going to talk about what we've done as a tax resolution firm. Again, my name is Joe Aguilar. I'm the founder of Eagle Tax Res. We have locations in Honolulu, California, Denver, Texas, Georgia, Utah. I always forget that one. And we're here to help you resolve your tax debt. That's what we do. This is all we focus on. We're not a regular tax preparation firm that does your annual tax prep or bookkeeping or something like that. We focus on resolution. So when you go to a specialist, like for example, if you get your car worked on, do you go to the guy that just does tires because they're good at it to work on your transmission? Or do you go to the transmission guy to work on your transmission? You want to make sure that you go to the right person that knows exactly what they're doing and how to resolve your tax debt. We network with hundreds of CPAs across the country and across the nation for us to connect, for us to be able to be the tax resolution arm of their firm. So they may not do tax resolution, or they just don't have time to deal with tax resolution because it takes a lot of time. It takes a lot of expertise, different kind of software, different ways of doing things. So we're going to go through kind of what we do. We're going to talk about some of the different areas. First, I'm going to cover, our basic agenda. We're going to talk about me for a second here. We're going to get into options for resolution, client cases, and then we're going to have a little bit of time for questions and answers, and then I'll wrap it all up for you. Shouldn't take very long. It's going to be a short presentation. Those of you who have questions, just please save them for the question and answer. If you think of it right away and you want to drop it in the chat box, go ahead and do that while I'm going through this. I've got Carly on the other side. She'll be kicking me over questions and make sure that I see them and answer questions for you. So again, my name is Joe. Again, Eagle Tax Res. I've been doing this since 2005. I started my tax prep business in 2017. I flipped over just to straight resolution, and that became the focus of our business. As I mentioned before, this is all we do. So we know the ins and outs. We know what's going to be accepted. I had a recent case. I'm going to talk about an offer and compromise real quick. I had a case where a CPA referred a client over to me that they had already submitted an offer and compromise for this client. This client had a house that was free and clear worth over $2 million. They had income over $250K and each. And there was no way that they would have qualified for some type of offer and compromise on their $300,000 in debt. But because, the CPA had worked the software and said that's what they can do, they gave that to them. So, of course, we worked with the CPA. I'm like, okay, we're going to go through this and look at it. If I can save the offer, I will. So we did financials. We kind of looked at everything, and I immediately knew that they weren't a qualified candidate for that. So what we did is we fixed it. We put them on a different kind of installment agreement. So let's talk about some of these. The creme de la creme, obviously, is offer and compromise, but let's start from the bottom. First, currently not collectible. That means basically the IRS determined you're unable to pay your tax debt. So simple, the IRS looks at your numbers and says that they cannot collect your debt, and they're going to leave you alone for the period that your debt is available to you, which is the CSET standard, the statute of expiration date. However, every single year, or as filings come in for you, like for example, you get a job and now all of a sudden a 941 is filed, which has your name on it, your social security is showing up, the IRS is going to key in that you now have income. So they're going to remove you from that currently non-collectible. Especially now that the IRS has gone to more AI options, I think we're going to start seeing this a little bit more, that people are going to be on a currently non-collectible status, and then all of a sudden they're going to get kicked off the status. They go, what happened? I haven't filed a tax return, but because of all the AI, because of all the changes that the IRS is trying to do right now, I think we're going to see that happening, and people are going to be kicked off their currently non-collectible status, and they're going to put them back into collection. So that's one concern. Currently non-collectible is like putting a Band-Aid on a gaping wound. It works until the Band-Aid falls off. And then once the Band-Aid falls off, now you have to start all over, resubmit financials to prove that you're still qualified for a currently non-collectible, or you have to go with one of the other options, which is I'm going to talk about here next. So again, the currently non-collectible, the IRS generally won't take collection actions depending on how much the debt is. They usually will file a tax lien. Almost 90% of the time nowadays, they are filing tax liens. I've seen tax liens for as small as $10,000 because the IRS is basically, they want to cover themselves. Currently non-collectible is great for someone who's a little bit more seasoned in age. Like, for example, I had a lady that was about 67 years old. She owned her house outright. She was living off her Social Security. Perfect candidate for currently non-collectible. Put her in currently non-collectible, unless for some reason her Social Security changes, for the next, she owed the taxes for another 5 years. For the next 5 years, she's going to stay on currently non-collectible. And then after the statute of expiration goes by, after the 10 years, she is going to, basically, they're going to write off that debt. And then she's no longer in that status because the debt's now gone. Because the IRS only has 10 years to collect that debt from you, from the time you file or from the time it's assessed. Again, key thing, the time it's assessed. I have another client who had not filed a tax return, and then they went back and they contacted us to fix their tax problem. I'm like, we can help you. And he's like, there's no way I owe this money because it's been 15 years. Well, we went back and looked at it. The guy hadn't filed a tax return. Nobody filed a tax return. Then he hired some other firm to help him get rid of his tax problem. They filed a tax return. From the time they filed that tax return, which was about 8 years ago, well, in this case, it was about 7 years ago, because this was last year's case. When they filed that tax return, that started the statute date. So even though the debt should have been really old and gone, because they filed a tax return, that created the new debt, the new statute date. So the statute started then and now has time to click off over 10 years, because that's how long the IRS gets. So again, you want to make sure as you're going into these, you want to talk to the right people, because you don't want someone to do something that's going to cause you more harm. Another thing, and I'm going to hit this real quick, you only have to file the last 6 years to be in compliance. So to put you in these statuses, you have to be in compliance. So you have to file the last 6 years of taxes when it comes to the IRS. We'll talk about the state a little bit later, but when it comes to the IRS, you have to be current in your taxes, which is the last 6 years. The next area is going to be an installment agreement. So an installment agreement is basically an arrangement where you're going to pay the IRS your debt. We usually do it in a direct debit installment agreement, so it's a lower fee. It also makes it come out automatically from your account. So this is, let's say you have a house free and clear, you have income, all these other things are going on for you, so your life is pretty good, but you just don't want to pay the taxes right now, or you can't afford to pay all the taxes you owe right now. So we can put you in an installment agreement. We can spread this out anywhere between your normal 72 months, or we can go all the way out to 120 months. So we can go out to 10 years on your installment agreement. Usually people say, well, I can just call the IRS to get it myself. You can, okay? I'm going to be 100% honest. You can do everything that we're talking about here, you can do yourself. I can also change the oil in my car. I can redo my engine. There's a lot of things I can do myself. I can build my own house. Doesn't mean it's going to be standing in 3 years, but I can do these things myself. So go to an expert. There's some things I always tell people, don't be cheap on. Don't be cheap on your shoes or your accountant, okay? Because those are really important. Your back is important, and who you're working with is very important. So you want to make sure you have the right person helping you out. But when it comes to an installment agreement, we're going to look at it and we're going to take it all the way out to that statute expiration date. Okay, so we're going to be able to take a program that the IRS normally won't offer you when you call them on the phone. They're going to offer you usually payment plan within 2 years, maybe up to 5 years, depending if you explain some type of hardship for them. And again, it depends on where it's at. If it's in, if you have a revenue officer, they're going to want it right away. If you're going to ACS collections, let's say, they're going to give you a little bit more time. They're going to let you kind of take your time paying it off. But they're not going to go out as far as we will without asking, without doing some special things. So that's really where we come in. We can spread out. We can help you manage your budget, because again, it's key for you to be able to manage your budget, especially if you're a business owner. We have a lot of business owners we work with, and they want to go on these installment agreements so they can plan things out. Again, the concern is, and you have to think about this, is what is your interest rate? So right now, the current APR is 8%. But again, it varies every year. I mean, for the longest time, it was only 3%, and then it jumped to 4% about 4 years ago. It's 2024 right now. And then it went into 8% almost immediately after that. And it's stayed at 8% this whole time. So as the Fed changes interest rates, the interest rate also changes with the IRS, which is a concern because if you're in a long-term payment plan and you don't do things correctly, there's a possibility that you're in a payment plan, all of a sudden you get kicked off your payment plan. We saw a lot of people in the year 2021 get kicked off their payment plans because they were on a long-term payment plan maybe for the 10 years out to the statute, and based on a 3% interest rate, it would have paid off all their taxes. Well, when the interest rate jumped to 8%, now it's not going to pay off their taxes within the statute. So the IRS is going to pull your payment plan and you're going to have to do it all over again. So those are some of the things that you have to consider, which we take into account. So when we build a payment plan, we usually build it out not quite all the way to 10 years. We back it up a little bit to make sure you have a little bit of wiggle room just in case the interest rates change. Again, it matters what happens in Washington, how those things affect you. So the installment agreement that we work it so that you can manage your budget still and you can plan it out how you want to pay it. And again, I encourage you to pay it off sooner, and then we can go after penalties. We're not talking about that right now, but we can go after penalties and make some things change. The next one is called a partial payment installment agreement. Okay, this is kind of the stepchild to the offer and compromise. With the partial payment installment agreement is you cannot afford to pay the full debt over the length, but you also have assets. You have something else going on. I have a lady right now, she has about $200,000 sitting in an account. She's got another $100,000 in another account, and that's really her life savings. She never paid into Social Security. She doesn't have an IRA. She has got nothing to live on, and she's in her mid 60s. So she needs that money to live. So we put her on, we're able to work out her current income and work out a partial payment installment agreement. So she's not going to pay the full balance over the life of the debt. She's going to pay less than the full balance over the life of the debt. We have another guy that we just did recently, and we're going to go through some of these cases where I'll show you where we have someone with a partial payment installment agreement, where basically if you take what they owe right now and then you multiply it times what the minimum installment agreement amount that the IRS would want, and you calculate that out, it's going to end up being like $200,000-300,000 almost, vice what we were able to negotiate for him, and we're able to reduce it to total payment was like in the 100,000. It's one of the clients we're going to talk about next upcoming, but we're able to basically save him, a couple $100,000 by just negotiating a good partial payment installment agreement. Again, this is based on what your actual availability of income is, what your access to your assets are. So for example, if you have 401k, you may not be able to access that because it may not be vetted yet. So those are different things the IRS looks at. And of course, if you stay in your partial payment installment agreement, as long as you don't have a net positive change in income, we can keep you on that partial payment installment agreement, and things are not going to change. The IRS is going to look at it every year. And if you don't have big jumps, like for example, I have a guy that recently we talked to, and he is not qualified for an offer because he's got the equity in his home, but has been trying to pay off his home, and he makes okay money. But when we do the math, he can actually make the full installment agreement, but he lives way below his means. His mortgage is only like $900, and the IRS allows for his area about $2,200. He's got no car payment. His car's paid off. It's old as dirt. He's got like an '06 or something like that. So I told him, I'm like, look, you can get, he was about $700 over as far as what was allowed. His payment plan, we estimated to be $650. So he's got $700 available to him. $650 is what his car payment would be if he bought a new car, which is an allowable expense now. Now he's only got $50 to $100 available every month. And of course, now interest goes on that. He's got to pay for the higher, the higher fees for his insurance and things like that. So that all goes into play. He doesn't pay as much in fuel because it's going to be a better economy car. But those are some of the things you have to consider, is working with someone that knows how to work the system. We go off the call sign, America's tax resolution referee, because my side thing is I referee volleyball professionally. So I get to travel all around and do a lot of volleyball. It's a lot of fun and I enjoy myself. But at the same time, I have to know the rules. And when I'm up there working and knowing the rules, I have to be very fair and impartial. But when I'm working for you, I don't have to be impartial. I'm working on your side. So I know the rules. I know how to make them work for you in order to get you that partial payment installment agreement. So we'll work with you. Unlike a lot of other big firms or people that just are not as experienced, they're going to run the numbers and say, this is what you have to pay, and it's done. We're going to look at the numbers and say, this is how we're going to get you to where you want to be. And if we can't get you there, we're going to be honest with you. I'm going to tell you right off the bat, there's no way. You make $500,000 a year and you owe $30,000, you're going to end up paying that over the life of the debt. But you make 100,000 or 120,000, and depending on where you live, that could be a big difference. So again, partial payment, we're going to get you that point. Offer and compromise. This is the creme de la creme. This is what everybody wants and everybody thinks they're qualified for. So if you think you're qualified for it, give us a call. We'll have a conversation, decide if you really are qualified for it. But the offer and compromise is where we make an agreement between you and the IRS. We're going to negotiate an amount that you get to pay to the IRS, and that's it. It's done. Once you pay that amount, then your debt is basically going to go into a suspense for 5 years. During that 5 years, as long as you pay your taxes on time, you file on time, you basically have no penalties. Then at the end of that 5 years, they write off your debt. It's gone. So you offer a certain amount based on what you have available to you to basically get rid of your tax debt. So it doesn't matter if you owe $30,000 or you owe $300,000. If you can afford to pay $5,000, then you're going to pay $5,000. So let's talk about some of those cases. This is one of my favorite clients we're going to cover here. His name, we won't give his name, but he's on a lot of our videos. He owed taxes for year 2008, 2014, 2016, 2017, 18, and 19. His total tax liability was approximately $207,000. And then he also had an additional fees on top of that for another almost $30,000. So he's about $237,000, give or take. But the final number came through, $207,000 is where he was at after we got rid of some penalties. The IRS accepted an offer for $199. So pennies on the dollar, there you go. $199 to 207, that translates to 10 cents on the dollar. That's what he ended up paying. So that's what we did with the IRS. Then, because I want to go for something special, let's go for the state. This was the state of California, by the way. California normally does not accept offers. It's one of those things that they're the hardest to get anything through. They normally never accept offers, and somehow we were able to manage it with the IRS and negotiate with the state to bring them down. He owed $91,000, and they accepted an offer for $16,500. That's 18 cents on the dollar. So yes, can you get this for pennies on the dollar? Absolutely, you can. And this is one person, two cases that shows that you can do this. But there's more. But wait, there's more. The next client owed taxes for tax year 2012, 15, 17, 20, and 21. Total tax liability is approximately $25,685. Again, we went in with an offer. This offer was accepted for about it was accepted for $1,128.08, 5 cents on the dollar. And everyone asked me, well, what are they paying fees, things like that? I'll be honest with you, our average fee is about $6,500 for a simple offer and compromise like this one. Okay, this one was straightforward. So all reality, she paid us, she paid the IRS, and we were an allowable expense. That's what helped reduce what she was allowed to pay, and was able to get rid of $25,000 in IRS debt. And again, this was done in 2022 is when we started this one. It resolved last year in 2023, and she was super happy that we're able to get rid of this. And we worked with her on our payment, so we spread things out a little bit, made it all work. Obviously, our payment was complete before the offer was accepted, but either way, she ended up paying a lot less than the full amount on the debt. Now, you can shop around. You can find somebody that might do this for cheaper. That's fine. Go for it. When something goes wrong, give us a call. That's what happened with this next client. They actually went around and tried to find somebody else, offered them. They said they can do different things, and they went for an offer, and all they did is end up extending their statute date. The thing just kept pushing out over and over and over again because they weren't doing the things the right way. So client number 3 we'll talk about was a partial payment installment agreement for the tax year 2021. And what they did is they went out, they found somebody else. went through bankruptcy, all kinds of other stuff, but still had this tax debt. So they came back to us and said, Joe, can you help me? Absolutely. We went after the total liability, which was about 282. Now, we'd already gotten rid of some of the penalties, bring it back down, but they would have ended up paying over the life of the debt to the statute expiration date $282,000. We got them on a partial payment installment agreement for $980 a month. So $980 times 119 payments comes out to be $116,620. Okay, so that's savings of over $165,000. But wait, Joe, I can go get a loan and I could pay off I can go refinance my house. There's a lot of different options you have out there, and you have to consider. You refinance your house. First, you're going to pay usually closing fees. You're going to pay to, some company fees for whatever they do, which you pay to us. So I get it, cool. But at the same time, maybe they're charging some type of penalty on you. Maybe they're charging some type of insurance that you have to add in. Whatever it is, they're adding things in, and you're going to pay that off over 30 years. So if you get a 30-year, you refinance a 30-year mortgage, or even if you do it in 20 years, you're going to be paying on that for 20 years. Whereas when you do it with us, we're going to figure out what you can afford to pay within that statute, and it will be no longer than 10 years. Because if you just file the tax return this year, today, that tax return gets accepted. It'll usually be accepted within 30 to 60 days after you file it. Sometimes 90. The IRS is slow some days. And then once they accept the return, then your statute got started. So as they accept that return, you have the 10 years from that date, 120 months. So we can get that penalty, that partial payment installment agreement going and set it up for a lot less. In this case, it was 42 cents on the dollar. So yes, pennies on the dollar. Yeah, a little bit more pennies on this guy's case because he made very, very good money. He was a registered nurse, owned a home. He had a lot of different things going for him, and he was young. That's the other thing that the IRS looks at. They look at income potential. Okay, so just because you're not making any money right now, or you haven't made any money, let's say since COVID, they look at before you made $300,000 a year, or you made $150,000, and now you're making $50,000. Are you going to continue to live at that same lifestyle? The answer is probably no. You got used to living at a certain lifestyle, and then now you want to change it and live for a year at $50,000 just so you can qualify for an offer. The IRS is going to look at you and raise the flag. You're driving a Maserati, you're driving a nicer car, who knows what you're driving. They look at all the things, and they encompass what's best for the service, what's best for the taxpayer, and then what's best for basically resolving this debt to save money. They look at the risk of litigation, all these other things, because they know that if they turn me down, I'm going to file for an appeal. We're going to keep going. If I think you're qualified for an offer, I'm going to keep pushing it. I'm going to take that as far as I can go. I'm going to appeal it. I'm going to keep fighting and keep fighting for you. I'm going to keep putting in different options. I'll put in different offers. We recently had an offer that came back at $16K. Then they came back at 12. And then I finally settled it today for signature. It went out for $10,000, $10,100 something is what this person is going to pay on their debt. It's not in this slide deck because it's not finalized yet, but this is some of the things that we go through. We talk to clients every single day. We're experienced. We know exactly what we're doing. My staff is amazing. By the way, first thing, when you say you want an offer, we'll do a mini, I call it a mini 433. It's basically the 433 is your financial form. So we do that interview with you. We figure out exactly what you're qualified for during that interview. Usually takes between 20 to 30 minutes for our initial conversation. So give us a call, click on the link below, whatever it is, follow us and ask for that initial conversation. During that conversation, we're going to decide what you're most qualified for. And I'll explain to you why I feel you're most qualified for that. Now, I've had people come out and say, well, Joe, I just don't make that much money. My husband makes $500 a month, and he only gets $500 a paycheck, and all this other stuff. And then today we're digging through somebody's financials, and that was the story. It made $500. So literally on the mini 433, I put $500 per pay period at 26 pay periods, multiply that out, a little over $1,000 a month. Well, they make over $1,000 per pay period, but with his withholdings, because all the other stuff that he has coming out of it, going into savings and doing other things, the guy actually makes about $1,200 per pay period. So that $500 is not a real number. Again, my staff's job, and I want to do this up front, and I'll be 100% honest with you, their job is to disqualify you. We want to disqualify you here in my office before I send it in to the IRS, because as soon as I launch that offer to the IRS, we talked about that statute date. There are things that suspend the statute. So every time you apply for a new installment agreement, the IRS adds 30 days. If you apply for an offer in compromise, the IRS will freeze your debt during the time that the offer is being considered. So they cannot collect from you. If you apply for bankruptcy, same thing. The IRS can't collect from you while you're in bankruptcy proceedings. So they freeze your CSED. They freeze your statute of limitation. That 10 years gets frozen, and it can go out depending on how long, how busy. Like during COVID, we had offer and compromise going in. I wasn't hearing from the offer examiner for 18 months. 12 to 18 months was the average. Now we're hearing from offer examiners within 3 to 4 months. I actually had one, that big one I was talking about earlier. Actually, this case right here, he really wanted me to send an offer. I told him, you're not going to qualify. He didn't believe me. Fine. You want to pay extra for that? I'll do it, but I'm going to tell you, you're not going to qualify. We sent in, it went really quick. The IRS assigned it to a special examiner because of the amount of money, because of what his background was, started looking at it, immediately said, no, there's no way. And then the other thing that was a lot of fun with this particular case, when we got started with him, he's like, I'm going through bankruptcy. I've got nothing. Well, he got 3 months bank statements. We looked at the bank statements, and he's out traveling across the country. He's not making any money because he's traveling. The IRS sees that, okay? You have to use common sense here, folks. We use common sense when we look at these things. If you come in and say you're not making any money, but then we go in your bank account and you're sitting in Barbados, or you're sitting in Korea, you're sitting in Cancun, and you're swiping your credit card, or you're swiping your ATM there, the IRS is going to go, why are they not making money? What is really going on, and what is happening here? Are they qualified to get this lower payment plan, or are they just trying to pull wool over the eyes? And the IRS will go back to, remember we talked about that currently non-collectible, they'll be like, put them on currently non-collectible, because they know that you're going to start making more money very shortly, and they can turn around and come back to you for that more money. So that's really what the goal is. When the IRS looks at it, they want to see where you're at, and they make decisions for that way. So again, the partial payment plan will put you on a smaller payment. That's really what we're going for, because you're not qualified for the offer and compromise. This is why we do the partial payment plan. Client number 4, again, this one's a fun one. Offer was out there. They owed for 11, 12, 11, 18, 19, 20, 21, 22. Basically, from 2018, they started a business and just kept losing money every day, or they're making money, but they kept running up their bill, and they couldn't afford to pay their tax bill, but on paper they showed money. So they kept running up their tax liability every single year. So we went through and we looked at it, and we're able to figure out exactly what was going on, and we're able to bring it back down to $121.93. That's how much the offer was accepted for. They end up paying that. So up front, so the way this works is you pay 20% up front. So they paid $22 up front, and then they had to pay the rest after 5 months after the offer was accepted. And that is how the offer and compromise program works. Again, this one is less than 1 cent on the dollar. So can you get again, the whole idea of this, can we resolve your tax debt for pennies on the dollar? There you go. That's your opportunity. That's exactly what we're talking about. That is how people save and get pennies on the dollar. So again, as we go through this, we want to look and see if you have any questions for us, because again, you can resolve your tax debt for pennies on the dollar. Yes, you can. These are proof. These are actual cases. We'll talk to you about them if you want to know more. Again, follow us, click the link below, ask all kinds of questions, and we're here to help you with those things. So I know we have a couple questions that people have asked, and we're going to jump over and see if Carly has some of those questions for us to kind of go through. And again, Carly, what do we have right now? I know one of the questions all the time is, do I have to submit my bank statements, or how many bank statements do we have to submit? The answer is it depends. Okay. And I always laugh. I used to joke around and say, oh, it depends. But the reality is it always does depend, because depending on what you have going on, like for example, if you own a business, the IRS is going to want to see usually 12 months of bank statements. So for those 12 months of bank statements, they're going to ask questions, and they're going to want to look back and get current financials and come and ask those other questions, and come and to be able to see what's going on. So they're going to want to know what exactly is happening with that. So they're going to ask, why do you make this much money? They're going to want to get an average. If your business is seasonal, for example, let's say you are a ski instructor, and you're doing that privately. Well, you're going to be busy during the winter, and then during the summer you're not busy. Or in one case we recently dealt with, the guy removed snow. Obviously you're going to be very busy during the winter, and then during the summer not much to do. So seasonally we have to get those averages, and there's different ways we get the averages. The IRS looks at the total for the business, the Schedule C totals, and makes those decisions based on the Schedule C totals. Sorry, I got a light coming from the window. I didn't realize it's going to do that. So again, they're going to look at those averages, and then we can balance them out over multiple years, or we can split them up. We're going to work with whatever's better for you, and we're going to use the IRM. We're going to use the Internal Revenue Manual to decide what is going to give you that best look. And that's kind of how we walk you into those things. So that is one of the things that we want to do, is use those kind of ways to work through those things for you. Again, they're going to want, if you're self-employed, usually it's 12 months of bank statements. If you're an individual, it's usually 3 months of bank statements. But again, if it gives a better picture by looking at 6 months, because maybe you are seasonal and there's bonuses that happen, we want to show that larger average to bring down that income. So again, we work the rules to make it work out better for you, and then we give it to the IRS, and we argue why we use that thing going. So that is really what we want to go through and answer for you. So again, next question. Carly, you want to pop on and give us some answers? This is Carly, everybody.
Hi, I'm Carly. Our first question says, how long does it take to resolve tax problems?
Again, my favorite answer is it depends. So it depends on what you have going on. A lot of times we get, we'll talk about things like a CP 2000, which is basically the IRS has a mismatch. We send those in. If I can get the right service center on the phone at the right time, I can get that resolved within less than 30 days. Sometimes we're waiting 6 months for the same thing to go. I have one right now that's in tax court. A CP 2000 is in tax court. That one has been going on for a year and 4 months. So again, depends on what you have going on and what we need to do. If you are going for one of these partial payment installment agreements, we may have to work through your financials and then have you make some changes to your financials to give you a better picture, so that that program may last longer. If you owe less than 50,000, it's a streamline. I can get on there 30 days. But again, all your returns have to be processed. So if you just filed a tax return and we have to wait 60 days for the IRS to process that tax return, now it's going to take 60 days. Plus, once I start the installment agreement, it usually takes about 30, 45 days for them to get it through the system. And then we want to make sure it actually worked. So, in there, you're looking around 4 or 5 months. So that's your average. 4 to 5 months, pretty on the lower end, and the longer end may take all the way to a year and a half. It all depends.
Gotcha. Our next question says, long story short, I paid my state taxes for 2019, but I didn't pay the full amount of federal taxes. I still owe $167,000. I've been avoiding it, pretending it's not there. Today, I got a certified letter saying that the IRS is going to levy $193,000, which includes penalties and interest. Should I just call them up and set up a payment plan, or is it worth hiring a tax lawyer? I did the OIC pre-qualified on the IRS website and obviously didn't qualify.
Again, we know the ins and outs. Okay. Yes. Can you pick up the phone and call them yourself? Absolutely, you can. Nothing's stopping you from doing that. You pick up the phone, you call them yourself. The IRS is going to say they're going to file a lien on you because that high of amount, they're going to file a lien. The next thing they're going to do is they're going to come back and they're going to offer you a payment plan, which may be maximum of 5 years. Okay. They're not going to get rid of your penalties. They're not going to look at any extenuating circumstances. They're not going to consider maybe your financials. Maybe you're qualified for that partial payment installment agreement instead of a full pay over the statute. Or maybe when we look at your financials, you'll be like that gentleman I talked about earlier that qualified to full pay, but they need a new car. They're so living below their means that when we bring them up to standards, because they're going to have to buy a car anyways eventually. So we allow them to get a car. Now we have an expense of $640 coming off their account, plus the higher interest, maybe different gas prices, whatever it is. All those are going to make a difference, and maybe they qualify for a partial payment installment agreement. Again, my recommendation, go the expert. If you prepare your return yourself, go to a tax preparer. We've got lots of CPAs that we work with. As I mentioned before, we may take it ourselves if we have time, but usually we farm it out to CPAs to help you to get your tax return prepared by a professional, because we work with them. We want to give them the leads. We want to help them out too. So, always go to a tax professional because they know the ins and outs. They know the little rules. And then for us, if it comes to resolution, we know how to bend the rules to make them work for you. All in a legal way, of course, all very ethical. Key point. What else do you got, Carly?
I think we have time for one more. This one says, I haven't filed since 2010. Do I have to do all year since then? I'm scared I will owe more than I can afford.
Okay, again, you only have to file 6 years with the IRS to be in compliance, okay? So key thing is you want to get into compliance. So 6 years is all that's required for you to be in compliance. I get on Reddit all the time. I talk about these things too. I see people that file, they owe from 2010 and they're like, oh, I had to file for 2010. And they go back and they do that. They file all these years back. And when they do that, it just keeps going and going and going. And it causes them so much of a problem because of these debt. They basically created themselves a new tax problem that they didn't have to do. I've had clients where, right now it's August. So 6 years right now is 2018 through 2023. But let's say they owe a bunch of money in August. Now I'm going to tell you always have to file your tax return. But if we're looking at it and, we have to wait for these things to process, maybe they didn't file their 2018. What happens? Well, they filed 2019 through 2024. Now they're in compliance and we can move forward. Okay, because the IRS is not going to automatically jump in the next 3 months and immediately make these things happen. The reason why I say 3 months is because the IRS goes dark after Thanksgiving and closes down for a little while. So again, we want to make sure that we're keeping within the right amount of time. So again, talk to a tax professional, let us help you, and we can resolve your tax debt. So again, I want to thank you. Thank you, Carly, for asking those questions. Again, we are here to help you. Here's all of our contact information. You can reach us. 888-EAGLE-5 is one that's easy to remember, but we're here to help you. We're here to resolve your tax debt. And again, my name is Joe. If you have questions, give us a call. I'm happy to speak to you. I'm happy to work with you, and I'm happy to help you resolve your tax debt for pennies on the dollar. Thank you.